Hey guys, welcome to this market update. My name is Alejandro Zambrano, Global Chief Market Strategist with ATFX in London. I wanted to talk a bit about the strong declines we saw in risk assets on Friday last week. We saw the S&P trading lower, the German DAX trading lower, but also copper prices and dollar yen. The fact that all these markets declined on Friday on the back of weak data from Germany does send us a bit of a hint of what may happen in the next few days. So it's important to pay attention. Now, what am I referring to? Well, on Friday, the markets declined, and this happened primarily on the back of data out of Germany. And I'm referring to the German manufacturing PMI. The reading of the PMI indicator for the latest month printed pretty much at 44. Every time this indicator is below the 50 level, that tells us that the manufacturing sector is contracting. Now, why is this important? Well, for a country like Germany, where the manufacturing and industrial sector is important, it's a leading indicator telling us of what may happen with German GDP growth. Now, if you look at German GDP growth, for the last 2 quarters, the numbers have been bad. In the third quarter, GDP contracted with 0.2%, whereas in the fourth quarter, GDP did not grow at all. Now, given the way the PMIs are looking right now, it does suggest that we will most likely have a contraction in the first quarter GDP. That means we're going to have about 3 quarters of no growth in Germany, and that is worrying investors and the markets. Not only that, in France, we had some similar developments in the PMI, where the PMI slipped below the 50 level again. Again, it doesn't look that bearish as it does with the German manufacturing sector, but it definitely is not good. Now, the question is here right now, does this really matter? I did do a video about a week or so ago saying that it looks like the economic data is lagging the stock markets, and that stock markets themselves are leading. So it could be that the data we're seeing now is just sort of, or that stock markets have bounced like the German DAX, could potentially be a hint that maybe we're going to see better data going forward. But the price action in the markets are telling us a bit of a different picture, and it is really important to pay attention to the price action. Now, if we do take a look at the German DAX was bullish up until Friday, but on Friday here, the market traded below support and traded lower, and is for now at least short-term bearish below 11,653. Now, if you take a look at something like the dollar yen as well was bullish, but then here on the 22nd of March, we saw a significant decline, and it does suggest to us that the dollar yen is now bearish. As for the S&P 500, the trend remains bullish for now, and the market continues to trade above 27.79, and we might potentially see just a push to the upside here. But it's important to start to pay attention here, because this market is for now not bullish, but the other 2 ones we just covered are bearish. Another one as well, which is sending us some important signals, is the price of copper. Copper prices were trading within this massive rectangle, and the market could either broken to the downside or then broken upwards. But eventually, here on February 19th or so, the market did break to the upside, and it did look like copper prices were going to head substantially higher. However, the price now is back into the pattern, and it does look like a false move in copper prices. Again, this is nothing conclusive, it's just price action over the last few days or so, but they are sending us some interesting signals where we're seeing the markets react badly to economic data. And not only this, there's some other markets I would suggest you to check out. I'm talking about markets like CAD yen and Aussie dollar yen, but also dollar Turkish lira, dollar South African rand, those emerging market currencies, and also the more sort of minors like CAD yen and Aussie dollar yen are also telling us the same thing, that we are potentially seeing more of a risk-off situation over the next few days. Let's see what happens. For now, let's pay attention to the markets and to the different levels I suggested. But again, all of this is sort of hinting that we might start to see some interesting price action over the next few days. Don't forget to subscribe to our channel and catch me here at atfx.com tomorrow. Thank you.